morning and good afternoon, and welcome to the August 2022 DTN WASDE webinar. My name is Stephanie Carpenter with DTN, your moderator, and with me today is Todd Hultman, lead market analyst for DTN. During this event, all participants will be in a listen-only mode, but you may ask questions at any time during the event. To do this, click the Q&A section located on the bottom right of your screen, and this will open the Q&A panel. Next, type your question in the box at the bottom and click the Send button. We encourage you to ask questions at any time during the presentation. Your questions will not be viewable by other attendees and will be addressed during the Q&A at the end of the session. Also, this event is being recorded and a rebroadcast link will be on your DTN website within 48 hours. And as a reminder, our web address is dtn.com. We're ready to begin the webinar, so I'll turn it over to Todd.
Thank you, Stephanie. Thank you, everybody. Here we are in August, and it's that time of year when we start thinking about yields and what lies ahead for harvest this fall. And that is was a big part of the focus of what we look forward to in the August WASDE report, what USDA says about that. Keep in mind, USDA is basing their estimates on the producer surveys they get across the country, and they have not yet gone into the fields to look at objective field data. That starts in the month of September. So again, these are based on producer surveys, which are helpful, but we still have a ways to go. And of course, as you know, crops are still developing in the field, so this is a fluid estimating process. In addition to that, USDA had a second survey of planting estimates for the Dakotas and Minnesota released today. But as you'll see, that plus the prevented acre estimates just did not make a significant dent in the planting estimates that we'll see. So I'll just kind of let you know that here ahead of time. So let's go ahead and dive in and take a look at what USDA says, and we'll start as usual with our U.S. balance sheet for corn. Here are the initial estimates for corn. Today's newest figures for the new crop season are in the far right column. I'll be talking about all those red arrows in just a second. But before we go there, let's look at the green rectangle. That's the current, what we call old crop season. It ends on August 31st, so we just have a couple weeks left here in that season. But in the old crop season, we just saw one change to note, and that was the export estimate for ethanol was reduced by 25 million bushels down to 5.35 billion bushels. So a modest decrease there. We have noted in our market comments lately that the ethanol pace has just been slightly below expectations, but it's been very close. So I really don't expect any more reductions for the rest of the season from what we see in the ethanol number here. We may actually see a slight increase before it's all done. The rest of the estimates for the old crop season were roughly unchanged. So given the change in the ethanol demand USDA estimated, we saw a 20 million bushel increase in the bottom line for old crop ending corn stocks, 1.53 billion bushels. That's still significantly lower than corn ending stocks have been in the pre-pandemic years. So we're still operating on a lower corn supply here in the U.S. Now let's go ahead and shift our attention and let's see what USDA says about the crop coming up this fall. The first thing you'll notice, we'll just go from the red arrows from the top down, the planting estimate. Instead of 89.9 million acres for corn, we see a new planting estimate 89.8. So they took a tiny amount off. So whatever the prevented acres numbers were for today, it's probably not much for corn. And those numbers were supposed to be out by noon, but we've been clicking the FSA website, and so far they have not come up. So we'll have to provide that information later. But we can see here it did not result in a significant change in the planting estimate for corn, and that's the main thing to know in today's report. We did see a little bit lower yield estimate for corn, 175.4 bushels an acre. That was close to expectations. I think the trade was looking for 175.8. They do acknowledge some crop risks, some of the hot and dry weather effect on this year's corn crop. The new crop estimate, instead of 14.5 billion bushels, now we're down to 14.359 billion bushels. That's the third red arrow. So we see a 146 million bushel drop in the corn crop estimate today. The feed demand estimate was reduced 25 million bushels. The food demand up a tiny amount, up 5 million bushels. The export estimate for corn, and keep in mind, because this is the new crop season, it's always difficult to estimate demand in a season that hasn't even started yet. But that was reduced 25 million bushels, and maybe partly related to what's happening in Ukraine. It's hard to read their mind, but I have to wonder if that was part of it. Put it all together, we go to the very bottom rectangle, and we see a new ending corn stocks estimate, 1.388 billion bushels. That's down 82 million bushels from the previous number. So we do see, I'd call it a significant or meaningful reduction in the corn estimate, ending stocks estimate for today. Okay, let's go ahead and move on and take a look at the world numbers. On the world estimates for corn, there are three basic changes that we'll talk about in just a minute, but let's start in the upper right corner, and we see the ending stocks estimate for world corn is fallen or been reduced by USDA from almost 313 million metric tons down to 306.7 million metric tons. Now, if you hang around me very much, you know that I don't trust that China actually has 8 billion bushels of surplus corn on hand, and that always messes up USDA's world estimate. So I'm much more interested in the figure that you see at the lower end of that upper right-hand corner triangle, and that's the ending stocks excluding China. And that figure, we also see a significant drop. Instead of 108.7 million metric tons, we're now down to 102.5 million metric tons. So a fairly significant drop. That just translates to just over 4 billion bushels. And I'll show you a chart to give you perspective for that in just a minute. Now, the three changes I wanted to note from top to bottom. First, of course, since we do have a lower crop estimate here in the U.S., we do see that production reduction reflected on the line for the U.S. The second change, and the one that we're all very interested in, is the situation in Ukraine. In today's report, USDA increased the crop estimate, corn crop estimate for Ukraine from 25 to 30 million metric tons. That's a bit of a surprise, to be honest. They also increased the export estimate from 9 million metric tons to 12.5 million metric tons. So I would say they're probably encouraged by the recent movement of ships from Ukrainian ports, and with that activity going on, and so far Russia behaving themselves as far as allowing those ships to leave Ukraine, USDA did up its export estimate by 3.5 million metric tons today for Ukraine. The third change worth noting, it happened for Europe. And we've heard a lot about hot and dry weather in Western Europe this year. We're starting to hear about river levels being dangerously and historically low and upsetting commerce and trade. But obviously that's a situation where the European corn crop is wilting, and USDA lowered its estimate in Europe from 68 down to 60 million metric tons. We did hear of an estimate just yesterday from a private firm in France that had an estimate of 55 million metric tons. So there's widespread acknowledgement, I would say, of the problem in Europe, and but just how it, the specifics of where it eventually goes is still a fluid situation, obviously. But damage being done to the European corn crop, acknowledged by USDA here on Friday. The last thing to note, I don't have highlighted, but the demand estimates for China did not change. They're still expecting the same amount of demand, 295 million metric tons. And I guess I should also mention that the old crop import estimate for Canada slightly increased. 5.4 million metric tons was bumped up to 6 million metric tons in this report. So what's that? Just under 240 million bushels, roughly, of imports for Canada in the current season. Okay, here's that chart I was talking about. This is the chart of world ending corn stocks according to USDA, and these numbers exclude the estimates for China, which obviously are much more difficult to verify. And when we look at these numbers, the green bar on the right is the current old crop season, and the red bar is the new crop estimate. And you can see both of those numbers very close to the 4 billion bushel mark for ending corn stocks, and both of those numbers are staying limited, I would say, at a lower supply level in the aftermath of the pandemic. The one thing to keep in mind about this 4 billion bushel estimate is that almost 500 million bushels of that estimate is being held in Ukraine. So obviously those supplies are still at risk. We can't really verify very well just exactly what the amount is or what it should be, but or if they'll even be allowed to keep moving. Who knows? There's still a lot of risk in that situation. So even though it technically says 4 billion bushels, all 4 billion bushels aren't necessarily available, or I should say available easily. Another thing to keep in mind here. How about just in general? I thought I'd try a little different look here to give a perspective on corn prices and how they relate to their supplies and how it affects the value here. And this is a monthly chart. It goes back to 2008 of spot corn prices. And as you can see, I put a red rectangle on the 6-year period from 2014 to early 2020. That's what I call the pre-pandemic period. And that particular time in history, our corn prices were limited to roughly $3 to $4.50 a bushel as a kind of a sideways trading range. During that time, USDA's ending stocks estimates, which are shown by the green bars on the bottom chart, roughly varied around the 2 billion bushel mark. Sometimes they were a few 100 million bushels higher, sometimes a few hundred lower, but for the most part, supplies were fairly stable around the 2 billion bushel ending supply mark. Well, our new estimate today down at 1.388 obviously is a tighter supply situation, and that's one very strong reason why we have the higher price levels that we do enjoy today. And it started with China's demand coming out of the pandemic, and now that China is obviously in a situation where they cannot produce enough corn for themselves anymore, they've become big importers, and this year they've taken quite a bit again. So we have a whole new scenario, and of course we also, as you are keenly aware, have much higher input costs this year with the fertilizer problem and the whole logistical problem of shipping and supplies and all of that going on. It's just a whole different world from not that long ago when corn traded in that 3 to 4.5 range. In the new range, I suspect corn is going to settle somewhere in roughly the $5 to $8 level as a new range, maybe sometimes dipping to 4.5. But I don't think that'll necessarily happen this year because supplies are staying tight and demand has stayed active. So currently that spot corn price as of last night was $6.29. It's staying fairly well supported, especially as we're getting closer to harvest. And I see that as a good sign. Corn shipments, here we just have less than a month left in the current crop season, and corn shipments are up to 2.24.5 billion bushels. It's slightly below pace of USDA's estimate this year, but we always have to factor in Census Bureau data after and those reports come in about 2 months late. So there's still a chance for corn to reach its estimate here, and so I think that's one reason why USDA kept the old crop export estimate unchanged today at 2.45 billion bushels. And as I say, China, again, has been an active player this year. They've taken 580 million bushels of that total so far, of total sales, I should say. Basis. The basis in corn, you may have noticed, has come down lately. DTN's corn index of national cash prices across the country has slipped 29 cents from what we were talking about a month ago. Last night's corn index came in at 697. The cash basis is now 68 cents above the September contract. And as you can imagine, it's fairly remarkable still to have cash prices that far above the futures board, especially as we're heading to harvest. So this, the current basis situation, even though it's slipped, which it normally does this time of year, it's still the strongest in 8 years. So it still reflects lower supplies of corn and very strong active demand. So those are all good signs for this market moving forward. The spread, the September to December corn spread, I would say is not saying a lot too significant at this time, but I just wanted to show it up here. They're roughly trading at even money at the current time. So the best thing that can tell me, I guess, is that the market does not expect any major price dislocation as we move into harvest. So we're going to have some early harvest in September, and obviously things are going to pick up as we get into October, November, but the market itself is expecting no big dislocation or disruption, I would say, of the market through this time, at least not at this point. The speculative positions in corn, I have a little different view or picture here to show you than what I normally show. Here I've separated out the non-commercial positions into their long and short components. So the green line shows the number of contracts that non-commercials or speculators are long in corn, and as you can see that the number of positions have declined fairly sharply since mid-May, and that's coincided with the drop-off in prices from roughly $7.50 down to roughly $6 for December corn. The good news about that moving forward is that the specs now hold the smallest amount of long positions that they've had since the pandemic of 2020, and which means that the less positions that are in their hands on the long side is the less selling potential they have. So by having the markets, the speculators largely shook out of this market, it should trade a little bit less nervously now. It should pay more attention to corn's fundamentals rather than all the worries about outside markets and all of that. So moving forward, this market ought to make a little more sense than it had in, say, late June and early July. Soybeans. All right, what did USDA say about soybeans today? And again, we have all the new crop estimates on the right-hand side, but before we go there, I just want to point out that the export estimate for soybeans in the old crop season, the current season, was reduced by 10 million bushels. It's now 2.16 billion bushels. We've been talking about soybean sales have been adequate and been more than adequate, but our shipment pace has been slower than it's needed to be, and so it's understandable that USDA reduced that export estimate by a modest amount, I would say here, to 2.16 billion bushels. The new ending stocks figure for soybeans is now 225 million bushels, and that just reflects a 10 million bushel increase from the adjustment in exports. So pretty simple, and 225 million bushels is still a fairly tight supply. That's not much margin when you're talking about ending supplies for an entire crop year. So it remains a very tight market. Now let's take a look at what USDA says about the new crop in the fields. USDA, first of all, adjusted the planting acreage down slightly from 88.3 down to 88 million acres even, a slight reduction there. Now I'm curious about what the asterisks are. I didn't have time to check the asterisk before, and maybe it doesn't mean a lot, but anyway, if it's important, I'll write about it in comments later. So anyway, a slightly lower planting estimate, a slightly higher yield estimate. Now the trade was looking for a slightly lower yield today, but that's not how USDA sees it. They increased the yield to 51.9 bushels an acre. If true, that's just slightly below the record yield for soybeans across the country, which is 52 bushels an acre. And if I remember right, that was set in 2016. Yes, 2016. So it's been 6 years since we've had that record, and we're close to it according to USDA here. Now, if you heard about our digital yield tour, I won't get off the beaten path too much, but we're expecting a much lower corn yields and soybean yields, more like 49 bushels an acre nationally, and that comes from the work from Grow Intelligence, who has been very helpful in providing a lot of very interesting and in-depth information. So this debate will go on, the guessing game will go on, but for today, USDA settles at 51.9 bushels an acre. That brings the crop estimate up slightly to 4.53 billion bushels. And that is an increase of 26 million bushels. The one demand adjustment to point out here, 20 million bushel increase in crush. And boy, is that no surprise. And in fact, I wrote about it 2 weeks ago in a Todd's Take, and I wrote about it again for an article that came out this morning. But that soybean demand has been red hot, and crush has been a big part of that. The bottom line for the new crop season in soybeans, we now have an ending stocks estimate of 245 million bushels. That's up 15 from last month's estimate, and again, is still a very tight supply situation with a lot of uncertainty in the whole new season ahead. So the new crop estimates are not done yet by a long shot, but here on Friday they stop at 245 million bushels. As we get to the world estimates, there were not a lot of changes to note. I'll just tell you about two tiny factors. But in the upper right corner, you can see USDA's estimate of world soybean stocks was increased slightly from 99.6 up to 101.4 million metric tons. The tiny increase coming from the little bit higher crop estimate in the U.S. And also there was a tiny increase in the crop estimate for China. Now, China is not a big grower of soybeans, but they do try. And their crop increased from 17.5 to 18.4, as you see in the red rectangle that I've highlighted there. And just to the right of that, even though their crop estimate increased slightly, their import estimate did not change. It's still 98 million metric tons, which is a lot of soybeans, so well over 3 billion bushels, and most of which comes from Brazil usually. Similar to the chart I showed you for corn, here's the long-term monthly chart going back to 2008 for soybeans. And as you can see in the same 2014 to early 2020 period, soybeans had a sideways trading range of roughly $8 to $11 for the most part. And for the most part through that time, we had fairly stable soybean supplies of roughly 400 million bushels, give or take some changes. And of course, the big bulge of supplies outside of that kind of stable range of supplies was when we had the tariff wars with China, 2018 and 19. So we did have a big bearish hiccup in those supply levels. But it's interesting that soybeans held firm at $8 support through that time. But again, just as in corn, that's no longer the supply situation or the demand situation we're in. And since the pandemic, we're in a much tighter demand situation. as far as soybeans go, not only for the U.S. but world soybeans as well, and that's a strong reason why we're trading much higher. And as I mentioned, crush demand is a big part of that. We'll see another chart about that. The current spot soybean, and in this case, spot being from the November contract, which is the most active, the price was $14.46 last night. Soybeans had a brief sell-off after the report came out this morning, but right now they're trading up 2 cents at $14.51. So still a market with a lot of support underneath it, very strong demand, and we still have lots of questions about just how big the U.S. soybean crop is going to be in the next couple of months when harvest begins. But basically, the fact that we have ending soybean stocks estimates consistently below the 300 bushel level is what's supporting the new price range here for soybeans. Soybean shipments, similar to corn, they've actually lagged their USDA estimate or target estimate a little more than corn has. Currently, they're about 90 million bushels below pace. We have soybean shipments of just over 2 billion bushels at the moment. The old estimate was 2.17. Now USDA's dropped the estimate to 2.16. So that makes sense, and I can't guarantee there might not be another small reduction in next month's report, but we're getting close anyway. And today's adjustment puts us much closer to target for how the soybean shipments will end here, just at the end of August, so August 31st, last day of the current season. So far, China has been by far and away the largest buyer, as usual, 1.12 billion bushels of soybeans purchased so far. And their purchases recently have been mostly for new crop sales, so this year is just about ready to wind down. U.S. soybean prices, the cash bids that we see in soybeans across the country are, I would say, a different pattern than what we see for corn. And we're kind of back to more of the older style when it comes to soybeans. We see much richer, more expensive bids in the traditionally favored areas of Illinois, Indiana, eastern Iowa, those areas around the Mississippi and Ohio River that have traditionally gotten the best soybean bids are showing up again in contrast with, say, those in the western or northwestern corn belt, where the price typically falls off a bit. On whole, the national average for the soybean index, DTN keeps, was $15.04 as of last night. That's down 31 cents from a month ago. If you've been following the cash bids lately, you've noticed that the basis level has dropped off quite a bit in the past month. But again, that's a traditional seasonal happening as we get closer to harvest. And even though that basis has been shrinking or weakening the past month, it's still the strongest in 8 years. 56 cents above the November contract for this time of year is still an incredibly strong cash market that we have here, and sign of very strong demand. And of course, the bids actually vary widely. This morning's quote from a USDA site in Chicago was $1.85 above the November contract. So there's strong variation in these bids even now. Red hot demand for meal. Well, here are just some of the bullish market clues that we're seeing. First of all, let me put your attention on the green line in the upper chart. That's USDA's average cash price for spot meal prices in Illinois. It closed, and that's Wednesday night's closed 6:05. Last night it actually closed at 6:10. It's been running about $90 above the September, the August contract. The August contract is a meal contract that expires here today. In fact, it's already expired around noon. And August meal is where we saw initially a breakout in late July, as it's been seeking to follow the cash contract, but there's no question here that it's the cash market leading the futures higher. And obviously this is having bullish influence on soybeans. When we were looking at August soybean chart a month ago, we were looking at prices that were falling lower and breaking below the $15 mark as we saw a lot of speculative selling hit the market. Well, in August soybeans, that's turned around fairly sharply now. That August contract, which expired today, was trading at 17.09 here on yesterday. In fact, let me get an update for us. Last trade I show today, 16.69. So it reacted back 40 cents. But obviously, these are very rich prices. Up above $17 was a new high in that August soybean contract. So largely driven by that cash meal price right now, we're seeing some very strong demand attention for both meal and soybeans. Obviously, meal enhances the crush value at a time when we also have good demand for soybean oil. And I think I've got that next here. Yeah. Here's the crush values, the blue line, and this is based on the January futures contracts. So I'm taking our attention a few months out ahead now, just past harvest. And you can still see that the blue line, which is what the bushel of soybeans is worth if you crush it into its meal and oil and whole components, or in this case, meal and oil, based on the futures, you get $17.45. Well, that's a much better deal than the $14.52 that you just get for it as a soybean. And so that $2.93 incentive is strong incentive for the soybean processors to keep buying soybeans, not just now, but as you can see well into January, given these attractive prices. It's just a phenomenal demand situation we have in soybeans right now, and I just don't particularly expect it to end anytime soon. The speculative positions in soybeans, very similar to what we saw in corn. There's been a sharp sell-off in the number of speculators that are holding long positions, and that's actually been a good supportive change for the market. The spec positions now on the long side of the market are at the lowest levels they've been this year, and it's actually good. So we shake the specs out, and now there's room for fundamentals to do their thing, and that's what we have here is a very strong fundamental market, which should be a little bit less nervous and less anxious with less speculators on the positions right now. All right, let's get to wheat. There's been a lot of numbers today, I understand, a lot of things going on, but we're not done yet. There's some very interesting changes in wheat as well. As we look at the U.S. balance sheet, it's really just the new crop side that we want to look at. There was a tiny increase in USDA's production estimate for U.S. wheat. Now we're up to 1.783 billion bushels. That's not a big change. The only major change on the balance sheet today I included in the red rectangle below, and that is we saw an increase in the export estimate. Instead of 800 million bushels, it's now 825. So USDA is seeing a little better prospects for exports in the season ahead. Ending stocks estimate, we get down to the bottom. Instead of 639, now it's at 610 million bushels, and that is supportive for wheat prices here in the U.S. The changes, I don't think, you know what, folks, my apology here. I did not get these changes posted on this sheet, but I'll just have to read them to you. In the case of winter wheat, the new estimate is 1.20 billion bushels. Not much of a change here. So what you're seeing on the screen are July's estimates still. My apology for that. So winter wheat, 1.20 billion bushels is where we're at. Obviously still down from a year ago, roughly 7% less than a year ago. On the hard red winter wheat, we came in at 576 million bushels. So that's down 9 from last month's estimate that you see on the screen. SRW wheat came in at 381. That's a 5 million bushel increase versus last month. White winter wheat, 240 million bushels. That's 2 million bushels less than last month. Other spring wheat came in at 512 million bushels. Yeah, sorry about the confusion there. And that's obviously much better than the 331 million bushels that this crop came in with a year ago. The drought is not near as bad this year for spring wheat, but they do have some weather challenges still going on as we speak. And then lastly, durum wheat production came in just under 74 million bushels, and that's also a big improvement from last year's 37. So my apology again for not getting the correct numbers on this screen, but hopefully overall you can see that there were really no big significant changes to the estimates for today. New crop ending wheat supplies, just two things I wanted to point out here. The left arrow is for the hard red winter wheat crop. USDA increased its ending stocks estimate 9 million bushels up to 265. So, or excuse me, reduced its ending stocks estimate 9 million bushels down to 256. And in the soft red winter category, that estimate was reduced 11 million bushels down to 125. Those were, I thought, the most significant changes on that table today. So a little tighter situation in hard red winter wheat and soft red winter wheat. Now, there's numerous changes on this world balance sheet, but let's start in the upper right-hand corner first. And we see that in spite of all the changes that we're going to talk about in just a minute, USDA's ending stocks estimate of global ending wheat stocks hardly changed at all. It 267.5 down to 267.3 million metric tons. However, in the ending stocks estimate excluding China, which is the number I prefer to focus on, the ending stocks estimate dropped from 126 million metric tons down to just under 123 million metric tons. I'll tell you right now, that is the tightest global ending stocks estimate that USDA is estimating, and goes back 15 years. So even with the changes that we're going to talk about in just a minute, this is a very tight global wheat situation, and obviously the Ukraine war is not helping in that regard. Before we get to the different crop estimates of the different wheat regions, I want to point out that the demand total, which is the third column from the right, USDA increased its estimate of global wheat demand roughly 4.4 million metric tons. So that's a bullish adjustment. USDA also reduced its beginning stocks estimate almost by 4 million metric tons, also a slight bullish adjustment. And that beginning stocks adjustment points back to prior years. So some revisions have been made, and that's why those beginning stocks were changed. I did not have time in this report to track down yet what was behind, what accounted for the changes in beginning stocks, but I just wanted to note that both of those are bullish adjustments. Now, let's go to the second column from the left, the tall rectangle at the bottom, and go by, and we'll look at each country's adjustments to their wheat crop estimates. In Argentina, we see a slightly lower crop estimate, now down to 19 million metric tons. That's not a big surprise. We've been talking about dry weather conditions in Argentina basically ever since their crop's been planted, and that crop's now dormant at the moment. In Australia, they've had very good weather conditions overall. Australia's wheat crop estimate was increased by 3 million metric tons up to 33 million metric tons. In Canada, USDA sees a favorable change there, increasing the estimate from 34 to 35 million metric tons. In Europe, they continue to see their wheat crop get docked from the hot and dry weather situation that has really intensified as the summer has gone on. So we see a 2 million metric ton drop in Europe's wheat crop estimate. In Russia, we talked about this a lot in the preview and in all week's market comments. USDA's had this crop estimate for Russia at 81.5. Private analysts have been between 90 and 95. It looks like USDA is willing to come up and somewhat split the difference. The new estimate for Russia coming in at 88 million metric tons. And then lastly, for Ukraine, USDA left the wheat crop estimate unchanged at 19.5 million metric tons, but they did increase their wheat export estimate slightly from 10 up to 11 million metric tons. So USDA perhaps hoping for some wheat shipments yet to get out of Ukraine, something we haven't seen yet. Now, the other tall rectangle to the right just shows the accompanying export changes that go along with the crop estimate changes that I just mentioned. So in Australia, we see a 1 million metric ton increase in their export estimate. Same thing for Canada. We see a 2 million metric ton reduction in the export estimate for Australia, but that's offset by a 2 million metric ton increase in Russia's estimate. And then, as I mentioned earlier, Ukraine increasing 1 million metric tons there. So we knew this would be a big day of changes for crop estimates. Obviously, it's a very active time in the northern hemisphere especially, and a very active estimating time as far as the crops have gone. But I thought it was interesting that after all those changes, and even with a big increase for Russia, which was expected, the overall global ending stocks picture continues to look quite bullish for wheat in general. And here are the USDA's history of world wheat ending stocks final estimates, excluding China. And you can see the current estimate in the red bar is now close to 123 million metric tons, or 4.5 billion bushels. And again, you can see on this chart that's the lowest in 15 years. So quite a situation we've got going on here yet with wheat. And even though we've seen a big $5 drop in the wheat prices, it's largely been due to speculative selling, not so much because of any big changes or significant changes in wheat. And here, similar to the corn and soybeans I showed you, we also had a stable period of prices in wheat from roughly 2015 to early 2021. Prices traded roughly between, say, $3.60 and $6, or if we want to simplify it, we could say $4 to $6. And during that time, the U.S. wheat surplus, for the most part, was kind of hung around the billion bushel mark. You know, sometimes it went from 800, and sometimes it was above a billion, but that's kind of the area supplies hung around. Well, now we've got a situation, U.S. ending wheat supplies estimated at 610 million bushels. That's a significantly tighter situation in combination with global wheat supplies that are also historically tight. And that's why I continue to believe that wheat prices should have very good support after this recent sell-off here. So basically, as long as those ending stock estimates stay below 800 million bushels, it should be supportive of this new price range that we see in wheat. And quite frankly, it's been such a volatile situation with the Ukraine war, we don't really have a good assessment or idea yet of just what the new trading range might be. But I would suspect that $8 may be the low end, maybe $7 worst case scenario, but I don't think we'll see much selling in wheat below that without some kind of surprise. This is the basis situation for HRW wheat. It's not as strong as what we see in corn and soybeans, but there has been some improvement lately. DTN's national HRW wheat index was at 826 last night. That's 39 cents lower from where it was a month ago. The cash basis is 47 cents below the September contract. That's actually the weakest in 3 years, but to be honest, given the tight situation of wheat supplies. I'm not sure why exactly, but the basis doesn't seem to be maybe the best representation of what's happening. We know demand's been tough to come by, and we know exports have been tough to come by, and that probably contributes to the weaker basis in wheat. But we still have a tight supply situation overall. As far as the speculative positions go in wheat, the specs in wheat have been a little bit different animals. They actually started liquidating their long positions long before Russia even invaded Ukraine. And then when Russia did invade Ukraine, they kind of held steady while the market prices shot up anyway. But from the price peak of about mid-May on, we started to see some pretty significant liquidation of speculators holding long positions. And now those long positions are down to 39,000. That's the lowest holdings by speculators in 7 years. So again, we've seen a big washout of spec positions in the market, and actually I think it's setting up a potentially bullish situation here to have them washed out in as much as they are at a time when the fundamental situation still points to tight stocks ahead. In conclusion, I know that was a lot of numbers today, but there's a lot going on. It's kind of that busy time of year, and of course we're still continue to be very interested in what those corn and soybeans crops are going to look like this fall. Overall, I would say the report was slightly bullish for corn, and I say that because the world-ending corn stocks came in lower than expected. We did see an acknowledgement of the problems in Europe, the hot and dry problems, and those corn stocks came in less than expected in spite of a bump in Ukraine's production. So I think that's still a favorable result for corn. At the moment, we have December corn prices trading up 13 cents, 641 and a quarter. Soybeans, I think overall was a neutral report today. We did see a slight increase in U.S. Ending stocks of soybeans, but I wouldn't say it's a significant increase. And we saw a slight increase in the crop estimate for U.S. soybeans, but I'd emphasize slight, and I also emphasize that that's an early estimate. I do think there's going to be perhaps some fireworks in the September WASDE report when USDA gives us its first crop estimates based on objective field data. That will be a very interesting report and a significant report for the market. I would say even more so than today's. We also saw a slight increase in China's production estimate, but again, these were not big changes, and I really didn't see anything for soybean traders to be worried about in this report. And then lastly, I think the wheat numbers were slightly bullish. We did see a slightly lower U.S. ending stocks estimate, but I think the big news is that after all of today's crop estimate revisions by USDA, including a big increase for Russia, they're still estimating global ending wheat stocks at a 15-year low, and that's impressive. And that will make a difference this winter when end users are in need of wheat. So, Stephanie, I've come to the end of my talk, and this is a great time for questions, any questions that came up.
All right, we have one good question that came in, so I'm going to read this one verbatim. The question is, I know you are likely on a yacht in the south of France, so how bad is the drought there, and how will this affect Canadian canola?
Well, let me put my Mai Tai down for a minute and think about that. Well, first of all, I just love the thought that you think I'm on a yacht in France, and I would be glad to go along with that. Canola. Well, in fact, I got a little flustered there. Read the very last part of the question again so I know exactly what he's asking about canola.
Yeah, in the South France. So how bad is the drought there, and how will this affect Canadian canola?
Canadian canola. Okay. Well, if I recall, Cliff tells me there's still a lot of concerns about the canola crop, and we've seen parts of the Western Canadian prairie that are still dry. They just haven't had the rain, and so it looks like southeastern Alberta and southwestern Saskatchewan are the suspicious spots for canola there. On the other hand, we've got some competition, I think, in North Dakota this year where the conditions look better as far as rainfall goes. But overall, given that more of the oil, well, there's two things. And I'm sorry to be a little discombobulated here, but there's a lot of factors that play into this. We've got palm oil production expected to increase roughly 8% this year, and we've seen a big sell-off in palm oil prices up until recently, which have pulled down both soybean oil and canola prices. Aside from that, we're still going to have relatively tight supplies of world vegetable oil supplies, even though we are going to see increased production likely from palm oil. But aside from that, we still have a situation where fuel prices are high, and we're using a lot of our soybean oil to help make renewable diesel. And I don't see that situation coming to a conclusion anytime soon. And there's more talk of canola oil being used for that as well. So the situation in Europe is very dry. I think it probably will hurt it has to hurt the rapeseed production, I would suspect, even though I didn't brush up on that before this talk. But obviously we saw corn production got knocked in this report. I don't know why rapeseed production wouldn't also. So with that strong of a demand situation and the kind of the supply limitations that you have from soybeans and rapeseed, I think the canola price is going to be in good shape to find support here, just like most everything else. And now I'll get back to my yachting.
Thanks, Todd. One more question came in as you were talking, and it
Good.
is, why is soybean demand so voracious? I realize the crush margins are fantastic, but what is driving that robust demand for meal and oil?
Oh, I'm glad you asked. Thank you. Well, number one, soybean meal historically has had a strong bullish push from Asia's prosperity, and that is still true today. So China, not only China, but all of Asia's needs for soybean meal continues to grow year by year as that entire region gets wealthier. So that's the old story part of it. That's still true today. We also have a situation now where our corn supplies in the U.S. are tighter, and so the competition for distillers grains with soybean meal is a little more aggressive, and it's getting support there. And now I want to give a shout out to one of the customers of DTN who sent me a really nice and helpful and smart email this morning. He's from southwestern Oklahoma, and he read my Todd's Take article this morning, which, by the way, I guess I should refer you to because it lays out why soybean demand is so red hot right now, including meal. And the one thing that I forgot to mention, or not forgot, I overlooked to mention in that article is that, this year's cotton production is going to be down 2 million bales. And that translates to a lot of lost cotton seeds, which the dairy industry in particular likes to use for feed. So there's even less competition for soybean meal, or a greater need for soybean meal supplies due to the lack of or lower supplies of cottonseed that's going to be available this year. So just about everywhere you turn, the soybean market and the crush in general has just got a lot of things working for it this year. But if you get a chance, try to read my Todd's Take this morning. It probably lays that out better than I can here.
Great. Thank you, Todd. That's all for the questions today.
All right. Thanks, everybody.
Thank you. I'd like to thank everyone for joining the conference today. As a reminder, today's event has been recorded and the rebroadcast link will be up on dtn.com within 48 hours. Also, if you have any additional questions or would like more information regarding our topic today, Todd's contact information is listed on the screen. This concludes our event. Thank you all for joining and have a great day.